Hello and good morning to everybody. You're watching the Impact Money Show. We're on your TVs in Texas and Louisiana, and we are growing exponentially. Putting together the deal. Actually, the deal's closed now. We'll be putting together the funding for us to purchase 88 more TV stations. 88 more TV stations in 31 different states. Super excited about it. We will be the largest TV network, crypto-friendly TV network in the United States and probably the world. Today, we're going to dive into the current of finance, technology, and global economics to bring you not just the news, but the stories behind the numbers. Today, we're not only unpacking the latest in financial markets, but also celebrating our one-year journey together. This has been a year of learning, growth, and most importantly, impact. But let's not get ahead of ourselves. First, let's navigate through the financial landscape of today. Let me shoot off this link as well to my good friend Matt Dixon, who will be joining us. 1 year, huh, guys? Isn't that crazy? 1 year tomorrow. We have been doing the show pretty much daily. We've done over 300 shows. It has been an absolute pleasure, an honor and a privilege. It's been an honor and a privilege, folks, an honor and a privilege. Of course, it did take a couple of days here. It's Christmas holiday, and of course, my daughter and I are doing the Christmas Carol together, my youngest daughter and I. My older daughter is also involved. She's doing another play, so she's helping out on tech and stuff on this one. And of course, my wonderful wife is as well. You know, my wife has a lot of great sayings. One of them I remember as we talk about things over the years. She says, you really want to be in love at the beginning because, afterwards, everything kind of does what it does, right? So you really, really at the beginning, if it's hard at the beginning, you don't want to do it. And man, that was us. We were in love. We were in love. Oh yeah, we were hot and heavy, man. She's great. Starting in the automotive industry, we're witnessing a potential seismic shift. Honda and Nissan are in talks that could lead to a merger or the formation of a holding company. This isn't just about two companies joining forces. It's a strategic maneuver to counter the electric vehicle revolution spearheaded by Tesla and the aggressive market expansion by Chinese automotive giants. Imagine the implications. A new global player in the automotive world, one that could redefine competition, innovation, and possibly even market dominance. This move is about survival, innovation, and seizing the future of mobility. Let's be very frank about it, too. It's also about taking some of the power away from Elon Musk, the world's richest man. Also, I don't think anybody can deny the world's most powerful man. It's been a while. Yeah, man, good to see you. Good to see you. It's always fun. We love doing the show. I see Matt signed into the back. So, Matt, tomorrow is our 1 year anniversary. It's a little bit of celebration start today. All we need now is a good market pump. I'm in position early this morning. I got my 2-bit exchange going and we're flying. We are flying. On Wall Street, the mood is one of cautious anticipation. The Dow Jones Industrial Average has just marked its 9th consecutive session of losses. This is the longest streak since the cold days of February 1978. That was a cold year, as a matter of fact. I won't say why I knew that. This isn't just about market sentiment. It's about preparing for the Federal Reserve's upcoming meeting where a 25 basis point rate is expected. Investors are recalibrating their strategies, some taking profits and others positioning for a potentially more favorable borrowing environment. But there's a lingering question. What does this mean for inflation, for consumer spending, and for the broader economy? You guys know how I feel about the cartel that runs this, owns this country. They're out of control, completely out of control. We have to take our country back from these people. Tell them to shove that $36 trillion of paper debt with their fake money up where the sun doesn't shine. Kick them to the curb. In the realm of IPOs, Kioxia's market debut was a beacon of optimism amidst market volatility. The Japanese chip maker, backed by Bain Capital, saw its shares rise by 6%, valuing the company at over $5.3 billion. This isn't just about one company, it's about the continued investor faith in technology, particularly in the semiconductors, which are critical to everything from AI to electric vehicles. Remember, the NASDAQ, of course, hit the all-time high last week, I think it was. If it wasn't last week, it was the week before they hit the all-time high. Technology is fueling everything. Globally, the financial narrative is as varied as it is complex. In Europe, we see Italy's Banca Akros defending its stake placement in Monte dei Paschi di Siena, highlighting the intricacies of banking and investor confidence. In Asia, China's property sector, once a pillar of economic growth, is facing a significant downturn, signaling a potential long-term shift in one of the world's largest economies. Meanwhile, Norway's sovereign wealth fund is quietly expanding its portfolio into logistics, betting on the future of global trade and supply chains. In a former life, I did logistics. Stuff doesn't happen without logistics. Whatever you got to do, you need the logistics. That's why, people get upset with the truckers coming by on the roads and stuff. Man, you got to love those truckers. Without those truckers, we wouldn't be doing what we're doing. Let me tell you that. You wouldn't have the cars, you wouldn't have the food, you wouldn't have, all that stuff. Logistics now, of course, there's a lot more to logistics than just that, but Now, my friends, let's shift our focus to the mighty Bitcoin. This meteoric rise, I'll tell you what, guys, buying Bitcoins at $70 and seeing them at $107,000 is just crazy. It's crazy. After hitting all-time highs of 108,000, it dipped overnight. It was in the 103s. 103s. Oh my gosh. Oh, people were just... Actually, the truth is, everything pulled back, but there's a lot of faith in the market right now. And there's a lot of money. There's a lot of money in the market, and there's a lot of faith. And, here's the thing. I mean, what are we at? Like a 3 trillion? I don't even think we're at a 3 trillion market cap yet. Maybe we are. 3 trillion total market cap of crypto. It's still kind of laughable, guys. It's going to get way bigger from here. Russia may be behind the scenes trying to front run countries making a Bitcoin reserve. It's possible. But once that run gets going and these countries start to make Bitcoin reserve, man, we're going, guys. And we're already going. But gosh, man, $1 million Bitcoin. I mean, it is crazy. It is crazy, guys. Now, of course, it's volatile, guys. It can shift down to 60K too. But, guys like me will be buying at 60K. I'll tell you that. So I don't think it's going to go much lower than that. It could just... bull runs are bull runs. People say, what do I buy in a bull run? In a bull run, you buy, okay? That's the deal. You buy in a bull run. Now, of course, we trade too, so we buy and sell. But in general, for the layperson, I also added over here this QR code over here to join 2Bit. You can sign up for the 2Bit exchange there. You should be able to just put your phone up right toward that QR code, and it'll lead you to our to our 2-bit exchange. Referral link is Impact Money. Mr. Johnny Noteworthy, what's up, man? Happy Christmas and merry money making is right, man. I'll tell you what, we're on a roll. We are on a roll. I don't know if you can hear my cat sneezing. That's kind of funny. My wife got these crazy cats. I had nothing to do with it. She got one cat, and this cat, he's a great cat. No doubt about it. Great days, Johnny. And then when I was off overseas one day or 1 week or whatever, I think I was in the south of France or something for a couple of weeks. I come back and she's got another cat. Her and my wife, they have her and my 2 daughters. They have another cat. So now we have 2 cats. The one cat's still the coolest cat, and then the other cat. And she says, "Oh, Bruce, can you believe it? Did you ever think that you would be a cat person?" No, I'm still not a cat person. Okay, the one cat's kind of cool. The other cat's whatever. Anyway, wives, stuff they get you in, right? Can't live with them. Can't live without them. This movement on Bitcoin overnight isn't just market correction. It's a response to the expected Fed rate announcement. Lower rates could make Bitcoin more attractive due to lower opportunity costs, but there's also the element of strategic positioning. Some traders see this dip as a golden window, anticipating a surge if the Fed signals more dovish policies. Yet, there's a precautionary tale about the inherent volatility of cryptocurrencies and the broader implications for altcoins in the Bitcoin shadow. As well, being in the markets on days like today is risky business. Okay, it's very risky. It's risky business. Don't put more in there than you're willing to lose. And make sure you're very well collateralized, because sometimes it's before it decides which way it's going. You're also leading up to it, as you saw overnight, people exiting the market to let it go and then get back in. Okay. One thing you learn from trading a lot is that there's always opportunity. And especially if you're leverage trading. Big deal. So you didn't, you sold at one point and maybe you buy in a little bit higher. Big deal. Who cares? As long as you're catching the trend that you want. You just want to catch the trend that you want, whether the trend is down or trend is up. But we talk about all that stuff. It's going to be very interesting to hear what Matt has to say. Matt will be coming on in just a minute here. This brings us to an intriguing, almost fantastical discussion. Could the central banking cartel, the Federal Reserve, buy Bitcoin as a reserve asset? The idea sounds like something out of a dystopian financial novel, but it's being floated, especially in the political circles. Imagine the Fed printing dollars out of thin air to buy Bitcoin. A move that could theoretically bolster Bitcoin's value by potentially devaluing the dollar. Whenever people start discussing this stuff, I usually just say, you know what, that's probably already happening. So probably the Fed is already buying Bitcoin. They're probably already printing US dollars out of thin air and using them to buy Bitcoin. Crooks. They're crooks, guys. Yet it seems like more of a speculative theory than policy direction, given the Fed's historical caution with cryptocurrencies and the myriad of regulatory, political, and economic challenges such a move could face. Like I said, they really just do whatever they want. They don't answer to anybody. Nobody. They said Trump can't even fire them. Trump can't fire whatever his name is, Jerome Powell. We can just fire the whole bunch of them. Just fire the cartel. That's what we do. On the geopolitical front, Donald Trump is making waves with his proposal for an immediate ceasefire in Ukraine, suggesting direct talks with both Putin and Zelensky. His approach could herald a significant policy switch from come January 2025, but it's also met with skepticism regarding its practicality and the complex dynamics of international relations. Meanwhile, Putin claims Russia is nearing its strategic goals in Ukraine, a narrative that contrasts sharply with other people saying. And let's not forget the visionary Elon Musk, whose ambition to colonize Mars is both a testament to human ingenuity and a subject of debate. His plans for uncrewed missions by 2026, guys, by 2026, and human voyages by 2030 are part of a broader vision to make humanity multiplanetary. But as we celebrate technological advancement, we must also scrutinize the feasibility and the ethical questions. I mean, I guess. Before we delve further into these narratives, let's celebrate our own milestone. Our 1-year anniversary is not just about time, it's about the impact we've made together. We will be going to Consensus Hong Kong as well in February. Make sure to use code Bruce15 for a 15% discount. We'll be celebrating our birthday, our 1-year anniversary there. And for those looking to leverage our trading expertise, join the 2-Bit Exchange with the referral code IMPACTMONEY to tap into over the 60 years of combined trading insights from Matt Dixon and myself through our Copy Trader program. QR code's right there. Only Janet Yellen knows. Yeah, she's a mess. She's a mess. Well, Bruce, you flooded my Twitter feed, so there's that. Haha. That I haven't really been able to be on Twitter as much, on X. I do love X, but I haven't been able to be on as much. Stay tuned as we unpack these stories and more, exploring not just where the money is, but where it's going and how it impacts our world. Here's to another year of insightful discussions, informed decisions, and making a real impact. Happy anniversary to everyone, and let's continue our journey together. Speaking of together, I have the great Matt Dixon here. Sir Matt.
Good morning. It's great to be with you on the penultimate day to our 1-year anniversary. Absolutely amazing.
Yeah, I know, right? Pretty, we did it, man. You know, it's the first year in, and I'm waiting on some paperwork on this 88 channels, but looks like that's coming through. 31 states, 81 channels. That'd be a heck of a way to finish off the year.
Let me just pull a curtain because there's a lot of shade there. I don't know if that makes it any better.
It does make it a bit better. Yeah, if you do that side, that'll probably, there we go.
Yeah.
I gotta get you some of these little lights here. You know, we've been doing it for a year, so we need to give you some lights.
Yeah. I'll have to dig them out. I've got them somewhere. But yeah, it's been amazing. What a year it's been for crypto, hasn't it?
It really has been an amazing year for crypto.
Amazing year all around, really. It's been an eventful year. Who knows what next year will hold? I mean, we're almost into 2025 now. Where will it go? Obviously, we've got today's interest rate decision out of the Fed. That is going to be pivotal, I believe.
Yes.
So we're going to take a look at that. I'm going to go in to share my screen. I mean, I think the Bitcoin chart, well, there's a lot of charts that are very, very interesting. We'll have a look at overall interest rates anyway, just see where the Fed are in the current process. So I'm trusting you can see, first of all, my Bitcoin chart there.
Yes.
So the reason I put that up, and I think I'm not sure quite where to start, but I think we'll start with Bitcoin anyway, because it's been, as we can see there, Bitcoin that's all-time high, 108,388. So absolutely amazing. I don't think anybody at the depths of the FTX low would have believed that today would be on 100, well, you know, last couple of days been on 108,000. And who knows where it will go. I mean, the news has been extremely positive. More and more governments talking about holding Bitcoin as a strategic reserve. This is absolutely news, and nobody would have believed it. Everybody's saying they don't understand Bitcoin. This was a year, 2 years, 3 years, and so on ago. They don't understand Bitcoin. Well, the basic fact is that Bitcoin is a reliable asset. It's not hackable as an asset in its own right. So it's very, very secure. It's very transferable and transportable. Obviously, it can be transferred very, very securely across the internet anywhere in the world, very quickly, very cheaply. There's limited supply. It's got all these positives, and so much so that obviously it now has its own ETF from the beginning of this year, from early this year. We now have not only institutional interest, but governmental interest. So the future definitely looks bright for Bitcoin. But according to this chart, potentially, maybe, we may have a bit of a pullback short term. You can never be certain, but I've just put these lines on to show what is potentially what's called an ending diagonal. And it would just mean in this particular cycle, it doesn't mean it's the end of Bitcoin or anything like that. It just means that potentially there could be a pullback. And what better day or time for a pullback than the Fed interest rate decision? Now, we'll look at interest rates in a minute, but clearly it looks as though the Fed are definitely going to lower interest rates yet again by 25 basis points. And I think there's a 97% chance the market have factored in, 97% chance they're going to cut rates. But what is going to be really important, because that's nailed on, the market already appreciates and accepts and has factored in that we're going to get a 25 basis point cut today. But the big question is, what are the Fed going to do moving forward? And we'll take a little bit of a discussion, bit of thought on what the data is behind the Fed's decision and what they're likely to do moving forward. But an ending diagonal is basically a final wave in a particular cycle. As I say, this can be, you have cycles within cycles. It doesn't mean this is the all-time high. It's probably going to go much, much higher. I think when we looked at things longer term, there's much higher potentially to come. But in an ending diagonal, we've got basically a wave 1 up, 2 down, 3 up, 4 down, 5 up. And what I've done here, I measured the magnitude of wave 1, because even in an ending diagonal, wave 3 is not allowed to be the shortest wave. And very interestingly, I've measured wave 1 there. If you transpose this measurement now to the wave 2, somewhere about there, the wave 3 is just a fraction, just a tiny fraction longer than wave 1. And that's really interesting, because it looks as though it's virtually the same. It's just a tiny fraction longer than wave 1. That means this is a valid count as an ending diagonal. And ending diagonals, they're not very, doesn't look like an impulsive move, but it is the end of an impulse. And as I say, wave 3 has to be the longest, which it is. And then we've got the perfect wave 5 and the turning point. Well, what's good, again, ending diagonals very often follow trend lines. And you can see precisely here from wave 1 to 3 to 5, it's actually stayed within the trend line perfectly there. So let's just see, we could actually even potentially dip below that support line, because if it's an ending diagonal, it probably will dip below that support line. So let's see, we have predicted for some time that there could be a pullback, a bit of a shakeout, as it were, for all those people who are now long Bitcoin. There's a bit of over enthusiasm, perhaps. Too many people are now long Bitcoin, perhaps. And maybe it's time for a bit of a pullback, a bit of a shakeout. And if that does happen, I think probably it would be a great time to add to your bag of Bitcoin, maybe opportunity to add, buy the dips, as they say. So that's a real possibility. So as I say, 108, we're currently 104.7, 104,763 on Bitcoin. Potentially could be pulling back a bit more today. So let's just take a look at, this is the long-term chart of Fed interest rates. We can see going back to 1955, and the shaded areas in gray are actually periods of recession. Now, what's interesting is you'll see, particularly these last 4 recessions, you'll see that interest rates turned down before the gray area of recession hit. So basically, you've got interest rates turning down and recession hits. Here again, interest rates turning down, then sometime later, recession hits. Again here, interest rates turns down, then recession hits. Even during COVID times, interest rates turned down, then recession hit. Now, we've just seen interest rates turning down. So I'm just saying, there's a pattern. Doesn't mean patterns don't always play out. They don't always repeat. But it's it's pretty consistent here that basically we see a turn down in interest rates, or interest rates peaking, aligning with recessionary periods, and even right back to 1955, we just see it. It's uncanny, isn't it? Every single time. So, what do you think about that, Bruce?
Yeah, I mean, it's I mean, all the signals are there. The overall, and it's like you say with the data set. So Bitcoin's only been around a little over a decade, so it's hard to have a data set. But of course, we're now in the third cycle of this halving and everything, and so it's interesting, how that plays into the overall sentiment. You have guys like Michael Saylor, who's just buying and buying and buying, and then if the countries are going to buy a reserve currency, and then people are starting to get it too. I mean, they get it at $100,000. Okay, well, shoot, man, these dollars. If I stay in these dollars, I'm going to be poor, and I need to get out of them. So there's a lot at play, and I don't know if as well the broader economy could have a severe pullback, and Bitcoin could really take off. It's been going similar for a while. It didn't for a long time. It did its own thing, really. It didn't follow the overall market, but it has been following the overall market for the last few years. But we could see a major divergence as well.
Yeah, that's right. I mean, it's we've been using the normal economic indicators to tell us where Bitcoin's going. As I've said before, I actually put those halving events on a chart of the SPX, S&P 500, and it actually looked the same as if we put it on Bitcoin. I'm still not convinced that these halving events are predictive and they've formed a pattern or a cycle. As you say, there's not been enough halving events really to be certain of that. We've been in an asset, Bitcoin, which has continued to rise and rise and rise, initially as speculative, and now it's moved and evolved more into a store of value, but it's continued to rise. But then so has the SPX. And as I say, if you put those halving events on the SPX chart, you come to the same conclusion that the halving is actually, is what causes the SPX to go up. That would be a wrong thought, but it's logically what you'd think. And again, it's logically what you see when you see the Bitcoin chart. But I think the Bitcoin chart, I do think halving is very, very important. Obviously, it shows and it ensures that Bitcoin is a deflationary asset. So unlike fiat, where they're continually creating more and more and more, and it devalues over time, Bitcoin, there is less and less and less. So, and that's due to the halving event. Effectively, there's less and less being produced. So as we've mentioned before in some earlier shows, Bitcoin now has a better stock to flow ratio than gold. In other words, the amount of new Bitcoin being produced in relation to the amount of Bitcoin in existence is now less than that of gold. So there's more gold being mined and discovered continually compared with the amount of gold in existence. So in other words, gold has a worse stock to flow ratio than Bitcoin. Bitcoin is now potentially a more valuable store of value, a more reliable store of value perhaps than gold. So we'll see. I still think that Bitcoin has a massive amount of speculation built into it, and that is both a positive and a negative. So potentially it produces volatility, because clearly as a speculative asset, it's more volatile. It can drop very substantially if sentiment moves away from Bitcoin. That's usually not so much the case with gold. Gold, for some reason, it's been, for thousands of years, has been a store of value. Bitcoin is only just evolving into that store of value. So it's got some way to go, I think, to take on the mantle of digital gold. It's some way there already, but it's still got some way to go. I think that if and when there is a major market crash, I don't doubt that Bitcoin will crash with it. But my thesis is that Bitcoin will rise out of the ashes and will rise ahead of all of the other assets, and it'll be more and more important.
Yeah, I mean, when everything crashes, it crashes. There's hardly any safe haven when it all crashes, right? I mean, that's
yeah.
the way
I mean, in the financial crash of 2008-9, even gold crashed, not as much as the other assets, but even gold, because basically, this money that's being created, whatever money there is flowing in the system, goes into speculative assets, into stores of value. It's basically invested. And that's why after 2008-9, with all the QE money printing, all that money that's created had to go somewhere, and it went into risk assets. And that's why we saw the stock markets booming, and gold booming, and Bitcoin booming, etc. And whenever we get pullbacks, whenever there's monetary policy is loosened. So, for example, when the Fed cut rates, again, it's just a boost to risk assets because there's more money available. Less money has to be paid to repaying debts. It's much easier for companies. There's more money available for them to make profits, etc. So there's more money in the system, basically. It flows into risk assets, and that's what I've seen. But we're possibly coming towards the end. That's why I showed the interest rate chart. We're possibly coming towards the end of easy money. Now, they had factored in, I think it was 4 rate cuts next year during 2025. Now they're already talking about reining that back. So whilst it's nailed on, we're going to get a rate cut today. I don't doubt we'll get a rate cut today. If we didn't, then that would be a shock.
Yeah,
but
that would be a shock.
We're getting a rate cut. It's 97% sure we're getting a rate cut.
Jerome Powell would probably go the way of the insurance CEO there that got hit the other day if he did something like that.
But it's the forward messaging that really matters. And if they change from saying 4 rate cuts next year to maybe just 2 rate cuts next year, 2 or 3 rate cuts next year, then that's starting to firm up to basically strengthen monetary policy, to tighten monetary policy. So that would mean what they expected, the amount of money they expected to be available in the system by lowering interest rates. As every time they lower rates, it eases monetary policy. There's more money available to go into risk assets. But if they say instead of 4 cuts, there's only going to be 2 cuts, then that would be a significant tightening in monetary expectations. And that could cause a bit of a sell-off in risk assets across the board. So what is the reason for cutting rates? I mean, it really is they're walking a tightrope, and there's a lot of mixed messages at the moment. So CPI, I think CPI is well above that 2% target at the moment. That would tell us that perhaps they're possibly wrong to be cutting interest rates when the CPI inflation is way above the target rate. But then the economy is still robust. I think unemployment numbers even bounced back. They actually improved. So the economy is really mixed at the moment. They've got higher than expected inflation. They've got a pretty robust economy. So higher inflation, they should basically be raising rates potentially. They've got a robust economy again. I mean, even the GDP figures are really robust. They're actually expected to pick up in the next quarter. So most of the signs are telling us that there should be higher interest rates, and yet they're lowering rates. So why would they be lowering rates? The only significant, I'm really struggling to find reasons why they'd be lowering rates at the moment, unless they know something we don't, because even the Trump policies, I'm just thinking about that right now. The protectionist policies of Trump, which would be, the trade barriers he's potentially putting in place as soon as he gets into office on the 20th of January, are themselves inflationary. So that's driving up prices even further. So everything is inflationary at the moment. We don't have right now any particular deflationary forces. Yeah. So I'm really not quite sure. It's really quite confusing. As I say, I've said it on a number of previous shows, they must know something we don't about potentially the economy slowing for some reason. And they're privy to more information than we have, certainly. They've got all the top economists in the world, certainly in America anyway, and even in the world analyzing what the situation is. So they're telling us that there's lower rates coming. And again, I really need to know why. Let's see what happens. Maybe they know something is coming that we don't know about. And that's why I think the market is potentially...
they have a lot of tools in their shed. I was saying, even in the first part of the year of doing this show, I used to talk about how I was saying the dollar was gonna crash down in flames for the last decade, and then as you realize all the tools that they have in their shed, you think, okay, well, of course. I mean, if you can tax everybody, and you can, there's lots of stuff that you can do. There's lots of stuff they can do, and they're good at it. They're good at keeping the economy balanced, right? And
That's
they
what they're
have
supposed
that.
to do. Yeah. I mean,
Yeah,
even if, by the way, if this wasn't ending diagonal for some reason, we just got a pullback. At the moment, it's sticking within these trend lines. So if we just bounce down to the trend line, that would take us to a Bitcoin price of around 93,000. That's still, it's still 10% below where we are now. So that would be a reasonable pullback. I think that's a reasonable expectation to have. And so I wouldn't be going long at this stage. And I've said that for some time, even though the market keeps edging higher. I think it's always look to buy pullbacks rather than chase a market higher. And if you jumped in now, I think you'd be chasing it higher. But as you said, Bruce, absolutely, it's probably the wrong day to be taking positions when you've got an interest rate decision. Because
it's you never know what to expect. Johnny Noteworthy came in with a comment. He says, "Tell Matt maybe the UK can become the 51st United States and really experience a rally."
The UK is really struggling at the moment. I mean, as I've mentioned a couple of times, the recent new government is so unpopular, and it's actually, there's some statistics came out. It's more unpopular now, and it's only a matter of very short time since they came into power. It's more unpopular than any other government in history that they've got recorded anyway, while records are being kept. More unpopular than any other. And what have their policies been? I mean, their policies have been to raise to raise taxes massively, and to do a lot of government spending. So government spending, you might see as a good thing, but it's always, and this is what Trump has been good at in a way, trying to cut back government spending, because government spending is not efficient, really. You don't get great productivity out of government spending because there's no incentive there to be profitable, to spend for good reason. So when you basically tax people, you take all people's free money off them and then put it into government spending, which is really bureaucracy. That's what government is about. That's what they're good at, is bureaucracy. It doesn't produce anything. And this is what the Labour government, the incoming Labour government, have been doing, is up government spending but increase taxes, and it's just frightening people off. It's making them very unpopular, and nobody wants to invest in an economy when taxes are rising massively. Why would you invest in that economy, into bureaucracy, when you can invest into other economies where they're lowering taxes? So again, that might explain a little bit the flow of capital into America, because if America are lowering taxes, then maybe it's a good place to invest, and they're still profitable, the economy is still healthy, etc. So maybe that's why there's some flow back into America. Maybe that's why we've seen the US dollar rising quite a bit. So if I just jump back into the US dollar, we can see it's risen quite a bit. And this move from the top there on the dollar index, which was 108, somewhere around there, it's currently 106, but it came down quite sharply. But I think it's in 5 waves. We can see here 1, 2, 3, 4, 5 waves down. That's an A wave, I believe. And then we've got some kind of corrective move up to here as a B wave in 3 waves, 1, 2, 3 waves higher. And then we've got another 5 wave move down, 1, 2, 3, 4, 5 wave move down to give us a C wave. So potentially we are going to push higher with the US dollar. Now, again, what would do that? Clearly, as I say, the flow into America, at the moment, it's probably the most robust economy in the world, or one of the most robust economies in the world. Europe's suffering, UK is suffering, China's suffering. Where do you put your money? US seems a good place, especially if they're going to lower taxes and reduce government bureaucracy. Maybe that's why there's money flowing into the US dollar. And at the moment, if this is an ABC down, that's a correction. So we'd probably expect higher to go in the US dollar. That just reflects people's view that the US is probably a better place to invest. But if the US dollar gets too strong, it's probably going to be a bit more of a drag on the economy. It could slow the economy. So there's still danger, as we saw from our interest rate chart, that the US could, there's a bit of euphoria right now, and obviously there's been a lot of euphoria since the Trump election win, but actually the delivery of, once he gets into office on the 20th of January, the delivery from then on, that will be under scrutiny, and maybe, there'll be some disappointment. Who knows? Let's hope not. But I think there could be some disappointment, and that maybe when we get a pullback in the markets, a real pullback. But short term, potentially we're going to get a short-term pullback anyway with if they start to scale back the interest rate reductions. The only one in the world right now that's raising rates or talking about raising rates is Japan. Here's the yen, the dollar against the yen. And again, at the moment, we can see the dollar rising, yen weakening, and that's actually a good sign for risk assets. But again, how long will that continue? If the Japanese do raise rates in the new year, then that would be, that would really be potentially. We had it last July, didn't we? They raised rates, and we saw the massive sell-off in the markets. So if and when they raise rates again, I expect the same thing will happen, and that money will basically all be taken out of these risk assets and be used to repay the yen borrowings, because if the interest rates go higher on the yen, and it will repay those yen borrowings, so the yen will appreciate more. So then you see this dollar yen head down, and that usually, when that happens, that's when markets head down as well. So that's my expectation there. Even with the pound, I've got a relatively detailed chart here on the pound. I've got a 5-wave move up here in this big circle. We've got 5-wave moves up. Now, potentially that's what's confusing about Elliott wave. 5 waves can be either an impulse higher. I'm just trying to look. I'm not even sure that's valid. Yes, it is just valid, I think. 1, 2, 3, 4, 5. So that can be either an impulse high or it can be an A wave. And then we've got a 3-wave move down for a B wave, in the form of ABC for a larger B wave. And then we should get another 5-wave moves up for a C wave. That would still be corrective. So it would be a larger A wave, larger B wave, and larger C wave higher. Then we head down lower again. So that would be stronger dollar. But actually it'd be weaker dollar short term, but then stronger dollar. The pound is actually usually a reasonably good, it's usually quite well aligned with risk assets like Bitcoin and so on. So I'll be watching this quite closely. Hard to say. As I say, potentially a turning point today with the interest rate decision. I think we just need to watch closely. The SPX, again, this is really interesting one. We've had this line in the sand drawn above for a long time. This was the 100% extension of a previous wave. And this has been a glass ceiling and almost invisible barrier. We've made it visible with this line here, drawing that 100% fib extension in. But also, clearly, we had here the RSI going lower. So I'll just draw it in there because it's not on here. Let's just draw in the corresponding RSI from there to somewhere there. Yeah, I don't know why it's not showing, but anyway, the RSI, yeah, it is showing. It's just a bit slow, that's all. So we've got rising prices on the S&P 500, and we've got corresponding lower RSI. Yeah, internet's a bit slow again for some reason, but no matter. We still can very clearly see we've got RSI, a peak there, going down to lower point here, but at the same time, we've got rising prices in the S&P 500. So that was telling us that this is a potential, it's regular bearish divergence. It tells you of a reversal in prices. Now, what happened is this is a barrier. It's 100% fib level, and it just can't break through it at the moment. So at the moment, it hasn't broken through. If it does break through, then potentially we're going to go quite a bit higher. But we said from many, many months ago that around 6,000 would be a logical barrier. And we did actually say just above 6,000 would be a logical barrier for the S&P 500. And that's proved to be the case. And it was the 100% fib extension, and we got regular bearish divergence. And it's proved to be the case. So again, wouldn't be a time to chase prices higher. I'd wait for a pullback to potentially add to my position. I wouldn't chase prices higher from this point. I know we've probably got time running, but I'd just like to touch on Solana. as you know, one of my favorite trades.
Yeah.
I think that we've had an ABC down making a W wave, an ABC up making an X wave, an A wave down, a B wave up, and I think we're possibly working on a C wave down to give us the final Y wave. It looks corrective from the top. So that was the all-time high or equivalent to all-time high, depending on which platform you use, but it's around about the all-time high for Solana. It's corrected because everything's overlapping. So this movement up overlaps this movement down, this movement up overlaps this movement down, and this movement down. So you can see it's all overlapping, which is indicative of a corrective movement down. So it means the impulsive direction is still higher. So as I said, with Bitcoin, we may well get a bit more of a push down. That may well also be the case with Solana before we get another push. So I said about Bitcoin being basically an ending diagonal with a bit of a pullback. Solana's slightly different, but again, expecting a bit of a pullback before the next push higher. So for Bitcoin, it would take us again to brand new all-time highs. And Bitcoin is really the crypto of choice at the moment. It's got all the institutional, governmental, everything backing. Bitcoin is the big, the big story at the moment. It's the safe place to invest. Bitcoin's got its ETF. Solana hasn't. Solana has been rejected. Yes, Ethereum's got the ETF, but again, Ethereum is not the same story as Bitcoin at all. It's not the same store of value at all. And actually, a lot of Bitcoin adoption has been eking away, has been sort of moving away into other assets which do the same thing as Ethereum now, more cheaply, more quickly, efficiently.
Yeah, like we always say, guys, one of the reasons why Bitcoin is so different from a lot of these other assets is that you can't seize it, you can't freeze it, and those are very important things. You can remember your seed phrase in your mind, and you can have no other record of it, and you can fly anywhere in the world and get on a computer and access your coins. And if the government wants to take them or freeze them, you used to be able to, you had to hide your gold over in the Bahamas or something like that, right? In the Caribbean. That's why all the pirates and everything were over there. You don't have to do that anymore. And this is a completely new class of assets, something that the world has never experienced before. And Ethereum and these other ones, they can get a court order and then they have to comply by them. So it's different. It's a different deal.
Yeah.
Good to make money.
Ethereum and a lot of the other assets are now proof of stake, whereas Bitcoin is proof of work. So the work is the mining, the proof of stake is just how much you hold. So proof of stake is basically centralized and proof of work is decentralized. So that's the big difference between the likes of Bitcoin and, for example, Solana, Ethereum now, which are now proof of stake. Ethereum, as we know, moved over to proof of stake. And yeah, Ethereum, as I say, it's fallen out of favor a little bit. It's a long way from its all-time high. So its all-time high was, I think, around 4,800.
5,000. 5,000.
Okay, it was up there. It's upper 4,000. I don't think it quite reached 5, but anyway, it was up
there.
No,
you mean its all-time high?
Yeah.
Oh, okay. I thought it was 5. Was it 4? I mean, I could be wrong.
Yeah.
Anyway.
I mean, I know my chart is working slowly here, but I just put it on the long term just to see. I'll put it on a monthly just to see what we can see in terms of all-time high.
48.91.
Yeah, I thought it was 48. Yeah.
Yeah.
There's the level. And just see the all-time high there. Yeah, I've got 48.67, but depending on which platform you're on, this is on Coinbase. So yeah, 4,800. We're currently on 3,800. So it's 20% below its all-time high. Compare that with Bitcoin, which is on its all-time high, there or thereabouts. It touched it a couple of days ago. There's a big difference there, and as we say, that's why Bitcoin, as Bruce says, is proof of work. You're absolutely secure. And there was a story recently, wasn't there, Bruce? Someone had a $200 holding in Bitcoin. He actually screenshotted his $200 that he had there. He completely forgot about it, but he did keep his seed phrase. And basically just input his seed phrase just recently, a few days ago, to find out what it's worth. And his $2,000 was now worth, I think, over $200,000.
Wow.
And that's the kind of security. It's great when you can do that. And some of the greatest stories have been where people have forgotten the holding and they've suddenly just accessed it. They see the price over 100,000.
There's nothing like that. That's really great.
they search into their old safety deposit box where they kept the seed phrase or something, and then just input your seed phrase. You can resurrect your wallet and just see what your holding's worth. And those have been some of the greatest stories where people had some Bitcoin, maybe even mined it in the early days, just forgot about it. But as long as they kept the seed phrase in safety deposit or wherever, and then just input the seed phrase, see what it's worth. There's been some amazing shocks to the upside. Some people have actually found out they're worth millions. And there's another story, by the way, with Revolut. I think the people who invested in Revolut, just a couple of $1,000s in Revolut in the early days when it was basically, one of those public raises, trying to raise capital to start the Revolut Bank. Those people who invested, I think it's about $2,000 in the early days, are now millionaires. So there's some great stories about people getting into these assets early. And that's probably the same story for some of these crypto assets. You can still get into crypto assets early. There's thousands of them out there. It's not just Bitcoin, which is worth over 100,000, or Ethereum worth 4,000 or whatever. There's some which are still worth next to nothing, which some of those will be the assets of the future. But it's about finding them, determining which is which. And I'll probably finish today. Just let me just see. I'm just going to look at the eBay price.
Nice.
Obviously, I've been involved with eBay. But it's
you never sent me. You told me you were going to send me my credentials or update my credentials, and you never did.
It's quite interesting. We're currently, the platform's down, but the price has been going up, and I think this is really on expectation of what eBay. It just shows actually when there's interest in a token. So, for example, we can see here over the last 30 days we're up 1,097%. That's 11x basically. So if you had $10,000 in just 1 month ago, you'd now have $110,000 in your account. It's rising consistently. If I just put on the month chart, we can see that it's just been rising and rising and rising. Now, the biggest investor of all ever into eBay has actually taken a real role again within eBay, starting to get interested again, wanting to basically see his investment rise. So he's encouraging everybody and talking about investing into growing the protocol again. And that's really why we've seen eBay grow from,
where can people buy it?
It's just available on PancakeSwap. So you'd have to actually go into, if you wanted, probably tomorrow, I'll post the link to the Telegram group and how to get into PancakeSwap and buy it. But basically, PancakeSwap is one of the big decentralized exchanges. But you need the contract address, so I'll probably make that available tomorrow just to let people. It's done.
You could even put the link under the post today, under my post. I know some people are watching, so
yeah, I need to dig it out because it's on our Telegram group.
Yeah,
I'd have to dig out the Telegram group. I won't bother with that right now. But you'd have to look on I'd look on our Telegram group, find out the contract address, and then basically you can go onto PancakeSwap. You can buy it. And again, there's a real chance. There's not a lot of liquidity now, but the way it's growing, if we continue at this rate, the liquidity has also grown from the low, all-time low. It's actually done 30x from the all-time low. But also the liquidity is growing at a good rate as well. So if that continues the next 3 months, we could see potentially a brand new all-time high for eBay, which would still be another probably 100x from here. These are just potentials. There's no guarantees, but it's just a real possibility. What we're just saying was it's one of those tokens which has potential for the future, but it's one that you wouldn't put a lot of money, just maybe try a little bit. And like Bitcoin in the early days, you wouldn't put a lot of money, but you put a little bit. That guy had a couple of $1,000, now worth over 200,000. Same with some of these assets, just depending what it is. You can put into some of these young assets which have potential, give it a few years, and who knows what the future holds for it. So I guess we'll probably just finish. XRP is continuing quite nicely. We can see there. Looks corrected, 3 waves down, 3 waves up, if you ask me. So I think we've still got another wave down to come before we then push again higher with XRP. So as we said with Bitcoin, I'm expecting quite possibly with today's interest rate decision, a pull down in Bitcoin. I think we're going to see the same with Solana. I think we're also going to see the same with XRP, with Ethereum. So a little bit of a short-term pullback before we push again to highs. Again, same with most of the tokens. I think that's the case. Just finally, gold. again, pretty much expectation. We said following this all-time high, and we did have some bearish divergence around that level, push the price down. So we said it's going to be lower for some time, and that's precisely what's happening. At some point, I'm sure gold will reach new all-time highs once again. And as I always say, buy the dip. So when you get a decent pullback, maybe that's time to buy, but don't chase the price higher, especially when up here we did have on a longer time frame. I'll just put it in on the daily just to show you what I'm talking about, hopefully. Yeah, so we can very clearly see that we have basically lower highs in RSI and higher highs, corresponding higher highs in price. That is basically telling us that there was regular bearish divergence right here. And again, if my chart's working quickly enough today, we can see from the high points right somewhere here up to here. And I'll just allow you to imagine that, unless I can draw it in, but basically we've got higher highs in price, and we have from the same sort of point. Charts are slow, but it is working. Yeah, that's okay. So higher highs in price, lower highs in RSI. That's telling you price is pushing higher on gold without volume. So we're expecting a pullback. Precisely what happened. That's why I'm saying don't chase the price higher, even though it's all-time highs. It's a bad thing normally to just chase prices higher. When you see signals like this, regular bearish divergence, wait for the pullback. I think there's actually most probably still further pullback to come. But if you dollar cost average, as long as you're not at the previous peak, dollar cost average, don't put all your eggs in one basket. Just keep buying bits every time the price pulls back is probably a good strategy, as long as you believe prices are going to go higher. And I think long term, we still have cycle highs to come with gold, even with Bitcoin, with some of the other crypto assets, even with S&P. We could be due a nasty little pullback, could be, but these will probably just be buying opportunities. So let's look forward to tonight's interest rate decision. Let's really listen in. Let's hear what they have to say about interest rate policy moving forward over the next year. And then let's get together on tomorrow's show and just dissect what they have to say and where that takes us and what action we should perhaps be taking with our financial, portfolios moving forward. So I hope that was helpful today.
Amazing.
Thank you, Bruce. Thank you, everybody. Look forward to tomorrow's 1-year anniversary.
You got it, brother. Always a pleasure.
Thanks, Bruce. Thanks, everybody. All the best, and bye for now.
All the best. Cheers. The great Matt Dixon. Sir Matt with the Market Watch Report. Matt's giving us homework. Crazy. Cheers, brother. All right, well, that's a wrap for today. Great show to you guys. Always a pleasure. And I will be we'll be streaming, or we'll be back on your TVs in about we'll be back on your TVs in about 6 hours. It's actually we're back on your TV as well in 2 hours, 2 hours, 6 hours, and then 12 hours or something like that. Anyway, thank you, Johnny. You are welcome. Always a pleasure, and we will see you soon. Cheers.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.